Let's take a look at the global market highlights and news for March 21st, 2014. Bank shares rally. Philly Fed manufacturing better than expected, and gold and oil slump. Let's take a quick look at what is happening in the global markets now. Global equity markets edged lower on Thursday as investors positioned for a speedier rise in U.S. interest rates than previously thought. But Wall Street reassessed its view on a possible rate hike and also got a boost from data that pointed to an improving economy. Wall Street ended higher with the S&P 500 closing up 0.6%. Data on factory activity in the U.S. Mid-Atlantic region and on jobless claims boosted sentiment. While stocks had skidded in late trade on Wednesday following Yellen's comments about the timing of a rate hike, investors took a second look on Thursday. The Dow Jones Industrial Average rose 108.88 points to end at 16,331.05. The S&P 500 gained 11.24 points to finish at 1872.01, and the Nasdaq Composite added 11.684 points to close at 4319.286. The Philadelphia Federal Reserve Bank's Business Activity Index rose far more than expected in March after a contraction in February. Separately, the Labor Department reported that U.S. jobless claims rose by 5,000 in the latest week, less than expected. Financial shares, which are tied to the pace of economic growth, were among Thursday's biggest gainers, with the S&P Financial Sector Index up 1.7%. After the close, the Federal Reserve said 29 out of the 30 major banks met the minimum hurdle in its annual health check. JP Morgan Chase & Co. gained 3.1% to 60.11, rising above $60 for the first time since April 2000. Citigroup advanced 2.6% to 50.22. JP Morgan continues to shake up the market after announcing yesterday that it would sell off its physical commodities trading group. The $3.5 billion sale to Mercuria Energy Group, one of the largest private commodity trading organizations in the world, comes as JP Morgan looks to shrug off growing regulatory scrutiny around the financial sector. European shares finished steady after falling as much as 1% earlier on concerns about when the Fed may hike rates. In the foreign exchange market, the U.S. dollar added to gains against the euro on Thursday as new U.S. economic data followed a slightly accelerated monetary tightening outlook from the Federal Reserve. The dollar was at 1.3779 euro. The dollar edged higher to 102.42 yen from 102.32 yen, while the euro slipped to 141.14 yen from 141.53. The British pound fell to 1.6506, while the dollar rose 0.8835 Swiss francs to 0.8807. The dollar got support from a positive report on weekly U.S. jobless claims and an inline report on February's existing home sales. After several weeks of soft economic data attributed by many investors to harsh winter weather conditions, labor market data on Thursday showed the number of Americans filing for jobless benefits hovered near three-month lows last week. A report from the Federal Reserve Bank of Philadelphia showed that factory activity in the Mid-Atlantic region rebounded in March, suggesting economic momentum may be on the upswing. In her first press conference of Chair, Federal Reserve Janet Yellen on Wednesday indicated that the first increase in interest rates could come in the first half of 2015. Yellen said there would be a considerable period between the end of the Fed's bond buying stimulus and the first rate increase, adding the period could be as little as 6 months. Markets had widely expected a hike in the second half of 2015. These words sent the U.S. dollar climbing and gold tumbling. Gold fell 0.8% to finish at $1330.50 an ounce. New York's main contract fell 94 cents to close at 99.43 a barrel. Brent North Sea crude rose 60 cents to 106.45 a barrel in London. This is Amy Anderson from Option Rally signing off. Follow me on Facebook. And of course, I'm waiting for your like below if you enjoyed today's Market Watch. Have a great weekend.